This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade action today, another up day across the board. We've seen a lot of green across the screen here for much of this week. Let's say good afternoon to Bryan Doherty with Total Farm Marketing. Always a pleasure to catch up with you, Bryan. How are you, sir?
Jesse, thank you. Always a pleasure as well.
Well, we have good things to talk about today. We were chatting a little bit before we went on the air. Last time we talked, we were seeing the market sell off, and today we're in the middle of a rally. I mean, all week long, we've seen pretty solid strength throughout the grain sector. I would say the soy complex has probably been the star, and I think a lot of that could probably come back to weather concerns as we get into August, Bryan.
It absolutely is. As you get to this critical time of year, and we've talked about this multiple times, that the overall, what I'm going to say, lateness to the crop kind of pushes all of the crop into sort of the same window of maturity. And so you have that to contend with, but it's just a matter of a forecast that just looks really warm, above normal temperatures, and not all that great for precipitation, below normal. So when you look at that for a 2-week window, remember the crop's about a week late, both in corn and beans. So really it's around the 20th. So you're talking the last 10 days of July, even though we're at the 28th, and then early August. So just real critical weather zone to get those timely rains to really kind of allow pollination, pod setting, all of that to get a good start. The old saying in soybeans, just keep them alive to August, I think has a lot of merit this year. And then let August take over. Beans are made in August. So if you start out with a dry end to that period prior to August and then dry August, you can see with the bean market putting on 30 cents again today. Really strong closes, really firm finishes. You're seeing this opposite of what you were seeing on some of this downslide. Now we talked about, Jess, I know I'm rambling, but we talked about the sellers. The way somebody sells and then sell stops get triggered, then margin calls, and you get all this kind of catapulting downward. Now it's going the other way. You get people who are short getting out. You get people who bought, looking at this forecast, buying more. You got probably a good chance. You've got maybe a good chance of seeing some end users really in earnest start to cover feed needs again.
Well, and speaking of end users, I think we've seen a lot of that in the August soybean contract, specifically if we look at old crop a little bit, over $16 now again, and that contract's really been on a tear. It seems like end users, as you alluded to, trying to cover feed needs, they're trying to pry any old crop soybeans out of farmers' hands right now, it appears, Bryan.
Well, we know the supply has been tight all year. Cash has told us that both in corn and beans. But when the export's slow and the crop looks pretty good, things get lethargic really quickly. When I look at the bigger picture perspective and I look at the way that the market is starting to gather some strength here, I think the focus again goes back towards maybe the end user jumping in and the speculator jumping in. The other thing that's kind of happened here too is the stock market's picked up some good ground lately, and that's a little bit more of a vote of confidence. That market was catapulting lower as well, so it's good to see this week. It adds a little bit of flavor other than just kind of this continuous downward 5-6 weeks in a row, and farmers looking out their back window. Some have great crops, some are burning up, and especially those burning up, they feel a little bit probably vindicated today.
Well, looking as well at the product side of soy, bean meal's been on a tear. New contract highs we're seeing Wednesday, but then you come into today, bean oil kind of takes over as the leader there. And meal, we kind of unwound that spread a little bit, it felt like. I know we've seen some legislation going into being introduced in Congress on the biofuel side. I wonder if that may have a part in it. But overall, bean oil really strong day today, while meal took just a bit of a breather, but it's been a strong week in meal as well.
It has. Meal has really led the surge higher here, and that tells me the processors have demand for meal. They're trying to find beans. The emphasis is on meal. It's pushed the market higher. Soybean oil was kind of the darling of the complex for a long time based on tightening world vegetable oil supplies and concern of getting sunflower oil out of Ukraine. There's talk of some sunflower oil heading toward India. Don't know how to confirm that or not, but nonetheless, that has now flipped, where meal is becoming a more critical component to this crush, and we'll have to see if the export market picks up. We've kind of noted that China's been selling some beans out of reserve in recent weeks, which would tell me that they don't want to chase the market or not too hard from the U.S. Maybe there's some communication issues there with the administration. I don't know, but it doesn't take a vivid imagination to think, well, they're just going to try and pull out of reserves, bean market slides, come back in and purchase. We actually had a pretty good new crop bean export sales figure today, and that was at I think we're at 27 million bushels on soybeans there. So wouldn't be surprised though if there's a new look from importers saying, well, we're not sure this yield in the U.S. and again, maybe we get the export market to heat up here.
Well, Bryan, taking a look as well at the soybean charts, it looks like we have some bullish momentum. We've been talking about that, but also Chicago KC wheat today kind of did their best to try and go up and be a leader with soybeans. So I'll ask the question: do you think wheat market could try to maybe resume leadership here, possibly, or is this going to be a soybean-led rally? It appears for the time being.
I think, Jesse, as long as the weather concern surrounds more the corn and soybeans, I think your soybeans are the leader right now. I alluded to get that crop to August and let weather take over. I think there's a lot of truth to that. That comes from wisdom, talking to a lot of farmers over the years that just say, you can't really judge a bean crop in July. But if you get dry weather in July or in August, that usually has a hindrance on yield. And so I think that's what the market's thinking right now. The wheat, you're probably 75, 80% done with harvest at this point. Typically, it starts to gyrate higher, but I don't think there's enough real concern for weather today to make it all of a sudden lead. That being said, I am still massively scratching my head on this whole Ukraine thing and how we think we're just going to ship all this wheat around the world. Maybe the supply worldwide can get by for several months without adequate inventory. But I just don't have a lot of faith in anything coming out of that part of the world as especially with Russia involved as a good thing to just feel comfortable about. I'm uncomfortable with that. Let's put it that way. And I think the world should be too. Wheat's still a high price. You get KC up, approaching $9 a bushel. You got to have somebody buy it. Looks like Australia's got a good crop, but again, heat in the European theater. I don't see things changing a lot supply wise in the world market to give us comfort. When I say us, give the end user comfort to not be aggressively buying.
And I know as well, spring wheat tour going on this week. They're finding fairly decent yields there as well. Spring wheat market was third leg of wheat today, but I think even that, they're not finding a record crop across the Northern Plains, Bryan. So I think that goes right along with your thoughts on supply concerns.
It just seems that if you get off to a late start, which the spring wheat crop did, you have to have everything fall in place. And I'm not sure everything is falling in place or has fallen in place. So it's kind of fits and starts, probably better than expected. But if this heat kind of engulfs the spring wheat areas too, you got to think the maximum crop may already be listed on the table. And so is the crop, we get to this time of the year, we talk about corn, soybeans, and now spring wheat. Is the crop getting better and bigger than it was perceived last week, or is it smaller and maybe getting worse? One of the things I'll circle back to corn in this week's weekly crop ratings, Jesse, is we did see 3 percentage points come out of the good and excellent. Well, okay, that can vacillate back and forth, but when I see the poor to very poor category in July pick up 4 percentage points, now at 14%. That kind of tells me we're not on pace for a record crop. Almost no matter what you get in the weather from this point, you're not going to take poor corn and make it excellent. So you're going to have a lot of mediocre corn in spots, and I think the maximum corn yield might already be on the table.
And to your point there with corn, we've seen corn now over $6 again. One has to wonder if maybe $6 could be our floor with some of these yield concerns and the weather concerns in corn, Brian. I think that could be up for debate possibly.
I think it'll be up for debate a lot, depending what the weather does here in the next couple of weeks. But I'll also add, we've talked about this before, that if we look historically at kind of the decline in corn value from the peak in spring or summer, it's about 25% in that area. So when you take that times where we peaked, about 767, take 75% of that, puts you right in that 575-ish area. And I think we got down to the low about 562 last week. So, maybe we've seen the low. I would argue if this weather pattern holds true, I can't really bring myself to think what would make farmers wholesale dump out of corn. I think now they start holding on to it again, and very selective in their sales.
And that's something I think we'll have to watch for sure. I think there's been some farmers who maybe are thinking they didn't sell enough on the original rally, or maybe they're thinking they sold too much, worried about their crop. I know there's a lot of things we've talked about there as well, but overall, I think you're right. I think we could see farmers holding more corn. Let's talk livestock here, Brian. Fairly choppy, quiet day, it felt like on Thursday in cattle and hogs. It just didn't feel like much was going on there. Maybe taking a bit of a pause, especially that hog market felt like it needed to take maybe a little bit of a pause as well.
It felt like it, but it really didn't. August hogs 52 higher today, so
True.
119, down 17, 15, wherever these other contracts. I'm a bit surprised that they're holding the discount. I don't know if they're worried about the economy, interest rates. Sometimes the market, the old saying is, let's say, sell the rumor, buy the fact. This whole worry about interest rates, and then Powell speaks yesterday, and all of a sudden here you get stock market up today, and it's like, well, that's behind us. And he said some things that may have comforted the market. I think the big picture perceptively is, can demand hold up in an inflationary period, or is the consumer going to just back away? I think that's what's holding the cattle market. It's kind of like watching paint dry here lately. 154 in April. Again, we've talked about that. Not very far off the highs. If we get a little run, all of a sudden you're challenging 158, but $4 lower makes it look kind of weak. So I think on the meat markets, what we're seeing is steady demand. I think the market would like to see better export news. I think the market would like to get a better feel for that China is kind of out of an economic malaise, maybe turning the corner, and these COVID lockdowns. So unfortunately, it's really challenging to be bullish on the demand side without demand really picking up. And it's tough to be bearish on the supply side where we think supplies are limited. And here we sit kind of back and forth, both in cattle and hogs. Lastly, the feeders down today, inverse relationship to corn. As corn was pile driving lower, feeders were racing higher. Now feeders may have seen their peak here if corn prices hold up. Nice inverted head and shoulders formation there, Jesse, with a topside objective. As an example, I'm looking at the September contract right now. You could make the argument that you're going to peak around 188. We haven't quite got there, and I think higher corn prices will probably limit us from getting there.
Well, Brian, as well, and this applies not only to livestock, but to grains and really everything in general. You mentioned the Fed. We got that interest rate hike as expected. Today, GDP numbers out, second straight quarter of negative GDP growth. So we're technically officially in a recession. If you go by the definition, I guess. So you look at the outside markets and you look at the Fed, the recession talk, monetary policy, everything. It feels like you mentioned stock market higher too. It feels like we pretty much have gone, okay, this was all as expected, and it's almost a non-event in a way to the markets, at least the commodity markets, it feels like here today.
Well, for commodities, it seems to be a non-event. For the equities, it seems to be, we expected it. So let's look at something else. Maybe it's earnings, maybe it's employment numbers are still pointing toward, good. When you have low unemployment, you still in theory have good economic activity. So some are starting to question the measurements of the recession, and if it's not really dynamic, that it's really a no-brainer. Maybe we're really not in a recession. You hear all different types of things, with interest rates where they're at, and inflation where it's at. I heard this on the radio the other day. If they measured inflation the way they did in the 70s and 80s, we'd be at about 17%. So already maybe peaking out compared to what we did back then. I don't know if there's any truth to that, but the point of it is, I think there's a lot of people kind of scrambling for explanations, biasness, direction. I think time will just play out here, and as long as I guess I would look at and say, look, as long as unemployment numbers stay low, maybe not a recession, but with interest rates rising, what always concerns me is the amount of government spending that fueled this. And then we heard inflation was transitory, and that's not. Now it's a big deal. Now they're running to catch up. A little hard to have a lot of faith in that. Continue to see shifting analysis, but unemployment has stayed relatively low.
Very true. Bryan, any other final thoughts for us here today before we wrap it up?
Well, I think between last week and this week, and the weeks prior, we're in volatile times. 1 week is bullish, 1 week is bearish. Next week it might flip the other way. I would just encourage you to have good conversations with those who help advise or guide you. Think strategically about, if we talked about maybe being a little tight on, if you're short on cash sales, well, where do you make sales now in this environment, or don't you? And then it tips back over. So how do you do that? Maybe how do you have yourself covered? How do you make sure that you're kind of ready for and prepared for the market to move significantly higher or lower yet?
Well, I know if folks need some advice, they can reach out to you and the team at Total Farm Marketing by going to the website, totalfarmmarketing.com, or giving you a phone call, can't they?
Absolutely. We got a great team. If I'm not available, just give us a phone call, 800-334-9779. Love to have just a few minutes of your time, listen to you well, and maybe we've got some ideas or suggestions that strategically make sense for your operation.
Well, with that, Bryan Doherty with Total Farm Marketing, always a pleasure, sir. Have a great weekend. We'll talk to you next week.
Yes, sir. Thank you, Jesse. Have a good one.
And that's going to do it for Market Talk here today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.